I'm Larry Hughes, your real estate and mortgage broker here in Southern California. Today, we're going to talk about reverse mortgages, on how they can benefit you, the homeowner, in your later years in life. It's on the house. It's now time for your house to start taking care of you instead of you always taking care of your house. That's what reverse mortgage is all about. So this timeline shows that in 1970 they started doing the actual research on reverse mortgages. In 1988 is when the first home equity conversion mortgage was around. In 1996, it was estimated that over 16 million people could qualify for reverse mortgages by 2010. Today we're in 2016, and many Americans are taking advantage of reverse mortgages as it helps them enrich their lifestyle. So information of reverse mortgage can be obtained in several different sources, such as AARP, the American Bar Association, Fannie Mae, HUD.gov, etc. It's a great way to get some third-party information on reverse mortgages. How are some reverse mortgages used? Mostly they're used to improve the current standard of living of the senior in the home. They help the senior help other family members. They stop making mortgage payments altogether. They help with medical and prescription bills. They help set up college funds and tuition payments. Even help them put in grandchildren into private schools or schools that they wouldn't ordinarily be in. They do some additions to their home, fulfill lifelong travel dreams. They replace the income from a deceased spouse. They also can donate to charity, do the ultimate good. It is financial peace of mind. What do you think about when you hear the word money? Most of us say, I need more. Do you think I've got too much and I need to give some away? Or if I had more, I could do more things that I enjoy and get the things that I need? Well, that's what reverse mortgages help you do. What would you do differently if you had more money? Well, some of the most top of the senior concerns are the cost of day-to-day living, increasing expenses. Most seniors find themselves on a fixed income, therefore they're stuck in the box, so they can do only so much in their golden years in life. If their income grows, they're not keeping up with expenses or inflation. You want more than just keeping up. You want options, and reverse mortgage is one of them. For most people, the homestead or the house that they've been pouring money in for years is the single most biggest or the biggest financial instrument they have in their life. Many seniors have their mortgage paid off or almost paid off. So it gives them a lot of equity, especially in today's very hot real estate market. But what is equity? Can you take it to the store with you? Can you buy some groceries? Can you paint your house with it? No, of course not. Equity, what equity is tied up money. It's your money tied up in your house that you can't really get to unless you use one of the options we're going to talk about here. So, like I said before, many seniors find themselves in a situation where they're house rich, but cash poor. Not a situation to be in. So, two main ways to get money from your home. Number one, you can sell it. You can sell your home and downsize. Go to an apartment, go to a condo, move in with a relative, a son or a daughter, a family member. Or you can get a home equity line of credit, where you have to make payments, you have to pass a credit check, you have to qualify, and if you stop making those payments, maybe you fall sick or ill, or you lose your job, or whatever happens in life, you risk foreclosure on your home. Now there's a third way, and it's called the home equity conversion mortgage or reverse mortgage. It's a home equity loan that you never have to pay back as long as you live and you keep the home as your primary residence. Reverse mortgage or home equity conversion mortgage. So how does it differ from a traditional mortgage? There are no payments to make, therefore you cannot lose your home. for not making payments. There's no income requirements and there's no credit requirements. So you don't have to qualify and you don't have to have great credit. How it works. Let's first talk about how a foreign mortgage works so we can get a frame of reference. Your cash goes in to the home. Your equity goes up. So your cash goes down, your equity goes up. Month after month, year after year after you pay on your mortgage. That's on a regular forward mortgage. Now let's look at a reverse mortgage. Your equity goes down, tied up money goes down, but your cash grows. Your cash available to you grows. Again, what is equity? It's tied up money. So in a reverse mortgage, your tied up money goes down, but the cash you have available to you to spend, use wisely, goes up. In this slide, we're talking about using another source of income. Some of you are like 401ks or any other of those investment vehicles. When you make a withdrawal from those vehicles, the actual vehicle that's giving you interest every month is going to go down. So therefore, the amount of money you can draw, the interest that you're making on the money goes down. Different from a reverse mortgage. The actual home itself never stops appreciating. If the market is appreciation, the home is going to appreciation. You using a reverse mortgage to supplement your golden years does not stop your home from appreciating. So it's still going to continue to appreciate an original value, and income from investment will remain in touch and intact. So let's review a reverse mortgage. You always retain title to the home. Some of the top things or myths that are out there is that you lose title to the home in a reverse mortgage. Not true. The loan is HUD designed and FHA insured. Funds from a reverse mortgage are non-taxable. Sell the home at any time with no prepayment penalty. Money can be received in various ways and used for any purpose at all. No debt is ever passed on to your estate or your heirs after you eventually pass. No matter how much is owed in a reverse mortgage, your heirs are not legally bound to take on the debt. All retained equity is paid to your heirs. When the eventuality happens that you pass, your equity, any equity that you have, is left to your heirs. Reverse mortgages are safe. The lender never owns your home. It's a non-recourse mortgage, and what that means that the final amount of your loan will never exceed the value of your house. Your heirs are protected too. A reverse mortgage is insured by the Federal Housing Administration. This protects you and your heirs. Who's eligible for a reverse mortgage? Homeowners at least 62 years of age, and you live in your home as your primary residence. Can you ever be forced out of your home? No! You will only be required to live in your home as your primary residence, keep the home adequately insured, maintain the insurance, pay for the property taxes, and maintain the property, meaning don't let the property fall down, pay the taxes, and keep it insured, and live in it. Those are things that are required by a reverse mortgage. Will a reverse mortgage affect taxes or Social Security? No! The money received from a reverse mortgage is absolutely tax-free. How much money can you get on a reverse mortgage? It's based on three things: the age of the youngest borrower, the FHA appraised value of the home, and the current interest rate. Those three things are three factors determining how much money you can actually get from the home. How can you receive your money? You can receive it in a few different ways: a lump sum, regular monthly payments, growing line of credit, or a combination of the above. If you're thinking this sounds great or too good to be true, not too good to be true, but it really sounds great, yes, you're right, and it's time to act. I'm Larry Hughes, a real estate mortgage and real estate broker here in Southern South California, here to help you with your questions about reverse mortgage and actually applying for that home equity conversion mortgage. I can help you. I am the trustworthy partner here in Los Angeles. Give me a call at 323-228-2736. Again, I am Larry Hughes, a real estate and mortgage broker, 323-228-2736.